Hey, good morning, everybody. It's Hammer. Today is Thursday, July 3rd, 2025. Um, got bad news for you. Today, we're going to talk about what happened at the jobs data. We're going to dig a little deeper, talk about what effect it may actually have for rates heading into next week and whether we want to lock or float, what loans we want to lock or float. So, we'll go into all that today. If you're watching on the replay, make sure you stick around. If you are here live, say good morning. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time, the only place on the web where you're invited to get together and chat each day, each weekday, about what's going on with mortgage rates and pricing. Again, today's big event was the BLS jobs data. Normally comes in on Friday, but tomorrow being the 4th of July, it came in today. So we're going to talk about that. We're also going to talk about the big bloated bill and a new disappointment that I found that it actually um, it will affect gamblers and poker players. So I'll just talk a little bit about that. Don't worry, we're not going too far into politics. For the record, I hate both sides of the aisle. And I don't feel like I'm represented. I feel like there's two parties, and some of the members of Congress do try to represent their constituents, but good old Tom Tillis there, he tried. He was against the bill. So anyway, for those of you that are here this morning, say good morning. If you're watching the replay, don't forget, give me a hashtag replay in the comments. Let me know that you were here. If you'd like a quick reminder that we're going live each day, you could sign up for that at hmmr.io/reminder. That's our Hammer Solutions, the name of my company. That's the short code, hmmr.io. And slash reminder, or use this cool QR code over here, and that'll of course get you in as well. If you're on your phone, take a screenshot, go back to your pictures. QR code still works. I love that. I think that's such a cool feature. QR codes, again, so much better now than they were 10 years ago when they were out, because nobody could use them back then. So anyway, if you're here this morning, say good morning, and let's see what y'all had to say. Ron Siegel wants to know, does education really higher in June, or do we see more people going on unemployment as the school year ends? I don't think they go on unemployment. But also, yeah, the seasonal adjustment thing is definitely at play here. So let's go into more detail about the jobs data. And I mean, I could pull it up, but we'll just verbally go over it. So the number of jobs created were what was 147,000 jobs created, I believe. Let me go over and take a peek and make sure I have this up in front of me here. Number of jobs created 147,000 versus estimates of 106,000. And we saw revisions to the previous months. That's a big deal. The revisions were higher, not lower. Usually the revisions are lower. Good morning, Julie, Nathan Einkorn. I know it's a bad morning, Nathan, but the good news is there's not that much of a reaction. So let me flip the screen on. We'll go into kind of that part of it as well. Let me pull this up. All right. So taking a look here, if we take a look, like it says here, U.S. non-farm payrolls rise 147,000 month over month versus the estimates of 106,000. If we go a little bit deeper than that, stronger than expected headline gain in payroll, previous month revised higher. Also, the unemployment rate went down and labor force participation rate went down. This is kind of the part that really does catch attention. There's an argument that this is because of the deportation situation, but that would make how many of the people that were deported were reporting on unemployment, right? That's kind of my take on it. I think this stuff is whatever. The 2-month revision is positive at 16,000. So the previous 2 months were revised higher. Not lower. So, the number of jobs created, that actually, it points to more labor market strength. As it says here, bond market got hit hard on it. Let's go ahead and take a look at where we stand on the actual numbers here. So right now, mortgage-backed securities, as you can see here, they're down 14 basis points on the day. You can see this straight line right here. I did not get Presentify. Let me download Presentify real quick. App. Mac. Bear with me a second. I'm going to go ahead and add this to the Mac real quick so that I can use it. All right, there we go. Let's open it. All right. All right. So now that we've got that open, let me go back here and there we are. So now I can actually doodle and draw. Let's go to yellow. All right. So you can see here, we were actually up at right before the data came out. It was plus, it's hard to do this with a touchpad. We were plus 11 basis points when the data came out. And then you can see here, obviously, this huge drop when that jobs data came out stronger than expected. So the fact that I'm just making sure you guys are seeing everything good. Okay. So the fact that this jobs data came out so much stronger than expected, it was expected to be a negative number. Now, if it had been negative, here we go. Okay. If this that's just weird. Let me just stop the screen share for a minute. All right. So if the jobs data had come in showing weakness, it really would have added strength to the idea that we would see a Fed rate cut in July. So right now, markets, and I'll go back and show the screen. Right now, markets still pricing in a cut in September. And basically, the Fed takes off for the summer. But they are still pricing in a cut. Let me just refresh this and see if this has changed at all. This is July. Here we go. Okay, I was like, what? That changed a lot. Okay. So September. Here we are. So it did. It actually has changed a lot. So now there is a 26% expectation that we won't see a rate cut in September. All right. And if we compare that, let me click the compare button. If we compare that, I'm just making sure you guys are seeing. Okay. So if we take a look here, look at this change. Yesterday, it was less than 10%. And today, much, much, much bigger, as you see right here. But the expectation of a rate cut, of one rate cut, has basically, it's come down a little bit, but it's still strong. This is where you see the difference. There were some outlying market conditions where markets were like, hey, we may get a July cut and September would see a secondary cut and we would have two rate cuts. And that was still, it was only about 20% probability. Now that's dropped all the way down to about 5% probability. So big change here. Markets now basically have written off the idea of a July rate cut. So if you take a look here, we were still at about a 25% probability of a July rate cut. Now, if the labor market data did come in weaker today, this would have been a big change. We would have seen, instead of this went up, you see the blue, it's the dark blue is much higher. We probably would have been at about a 50% expectation of a July cut, and this column would have gone up quite a bit, right? So we probably would have been about 50-50. This would have been really good for rates and pricing. We would have seen, rate sheets continue to improve, not what we got this morning. So what happened is labor market data came in stronger than expected. And I mean, but look at this. I told you, this is what I wrote down in my lock commentary the last couple of days, is that even if we didn't get what we wanted to see, we're down 15 basis points. This is not 60 or 70 basis points. We didn't see rates jump up a quarter point. This is 15 basis points. So, it's worse rate sheets. And again, we're in the holiday weekend too. So you're going to see lenders that are pricing a little bit more conservatively. Now we could be seeing some money parked in bonds over the weekend, but remember, this labor market data, it's bad for bonds, but it's good for the stock market. So you're not seeing, it's not like there's a lot of money being parked in bonds and then calling it a day. What does change this a little bit, though, is that today is obviously Thursday. Market closes at 2 p.m. for the holiday and will be closed tomorrow. So basically, bonds are free to drift because traders are taking the rest of the day off, just like I'll be doing after I finish up with you guys, right? So everyone's gone for the holiday weekend. You're seeing the drop here that we've got going on here. And basically, we've seen, it was down about 30 basis points and it's recovered half of that. So that's not terrible. I mean, again, 15 basis points in the scheme of things. Not really bad at all. So even though the labor market data did come in stronger than expected, um, it's there. So Ron says, let's see what you guys have to say on things. Ron said, not much reaction because others see the internals I shared. So yeah, let's talk about that. So what did you share? Let me go to the chat and see. That was definitely a big deal, and that's what I heard about that on Bloomberg too, Ron, this morning when they were digging in, and government jobs increased. That were state government, not federal government, and a lot of those jobs were education. So these are not really strong numbers. The headline number looks strong, and we got an immediate initial minus 30 basis points. The 10-year treasury yield jumped up on that news. But then when folks started to dig into the actual data, they saw it's not nearly as strong as it sounds from the headline data, and that was definitely a takeaway that we've seen. So I'm going to see what else you wrote, Ron. Here, education really hiring in June. Um, and then exactly, do we really get a strong jobs report? It was 147,000 jobs. It wasn't 250 or 300,000. It wasn't a lot of jobs. It was just more than what was expected. Expectations were 106,000. This is much lower than that. So Jerome has been off for a long time. But this is the thing. So it's definitely, whether it's right or wrong, the headline data is going to give the Fed totally no reason at all to need to cut in July. They're going to go with that headline number. They're going to, especially when the CPI data comes out on the 15th, that could actually, I don't know if it'll change much. You guys tell me, Ron, you tell me if you think. I don't think it'll change much because there's so much more data to come out between now and September, that it shouldn't be a huge thing. And that's the other thing. This data, why I was saying let's just float into this report, because if it did come in better, it really would have helped us. And the fact that it didn't come in just means it hurts us minimally, because it basically takes that July cut off the table, and there's plenty of data between now and September's meeting to get more help. So, that's kind of where we're at. But that's it. If you've got people that are floating, there's certainly no need to panic. Again, not when you're down 15 basis points on the day. And the question is, do you want to lock or float anything closing near term? Let me type this out and then I'll put it up on the screen. I would probably be locking loans less than 15 days, because I just think that next week doesn't really have any momentum to improve, and we could see things worsen. And but loans that have time. So I'm putting on here. So if it's less than 15 days, I would lock it. But more than that, float. And I'll throw this up on the screen. So that would be, I mean, if it were my loan, if I was my own personal loan, if I'm closing the next couple of weeks, I'm locking. If you gambled coming into today's jobs data, it was a gamble. We knew that, and you lost. So you lose some pricing. It's money. I'm not going to say it's not, but it's not a huge thing. Loans that have time, though, I wouldn't be locking. I wouldn't be worried about it at all. I don't think it's anything we have to worry about at this point. So, keeping that kind of where we're at. And let me do center stage portrait studio. Look at, there we go. So dress up my my camera view. So that's it, my friends. So hopefully y'all have a fantastic holiday weekend. I'm going to sign off, and we're going to go to the lake for the day with my niece and have a good time. So hope you all have a fantastic day as well, and a fantastic and safe weekend. Keep all your fingers and toes if you're playing with those fireworks. And that's it. I'll see you guys on Monday. Take care, everybody, and have a fantastic one. Bye-bye.